What's up everybody? Welcome to the Stocks channel. My name is Corey, and Friday in the stock market we see a continuation of that bullish breakout, but I do want to remind you that we are still in a bear market. So today's episode is going to be very important, and I think you're really going to get a lot out of the information I'm going to provide you today. So first up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so Friday in SPY we were up 0.97%. And we see SPY continuing that bull breakout above our resistance trend line and above our critical resistance level that we had there at SPY 390, which now means with two closes above SPY 390 that the bear has officially retreated away from that level, and he is now going to be hiding up here right around 408 all the way up to about 414. Remember, that doesn't mean there won't be resistances until we get there, but that is where the big brain bear waits, which means it is very likely the bulls can go all the way up to that resistance before there is a very significant downturn in this bear market yet again. So yes, I think this is still a bear market, but you have to remember in bear markets, you do get these counter trend relief rallies and they can be very impulsive. So I do still have higher price targets before this bear is going to take another bite. So in the short term, you do need to be objective and realize that these are higher lows and higher highs. And I'm giving you very critical resistance levels that you can start to become more bearish at, but you always need to respect the current price action and trend. So I'm looking bigger picture here. If we just zoom out and we go back to the Dow Jones, we did get that double bottom and we did get the double bottom breakout and reach our price target. Then again, we had the small caps with the double bottom off of the level at 163. We had the double bottom breakout, and just Friday we reached our price target. And again on SPY, we had a double bottom down there right around 356. We had the neckline breakout and reached the price target right there, right around 399. And right now on the NASDAQ 100 triple Qs, we officially have this double bottom breakout from 260 above the neckline at 284, which is going to give us valid double bottom price targets to close the gap at 308. But of course, on the way there, we will have to battle the big bear at 293. So what I'm trying to tell you is that while we are still in a bear market, we are getting very bullish patterns in this bear market of double bottoms, and they are reaching their price targets. And we just had a confirmation of a double bottom breakout in the triple Qs on Friday with a much higher price target, which means SPY could easily push up to where I have the bear, which is going to be this level right around 408 to 411 and possibly even 414. Now, because we are still in a bear market, I do not expect the bulls to win that battle, and that means I do expect to see plenty of more volatility in this market. Even though I am bullish in the short term, you have to remember we are still in a longer term downtrend of a bear market. Now, the only thing that can change that will be the bulls breaking above this resistance trend line, which defines this bear market, breaking and closing above that level at SPY 414, and then we can start talking about this bear market being over. But we're going to remain objective, and the only way to remain objective is letting the bulls prove it to us. So we are making no assumptions that the bulls are going to end this bear market until price action proves it. Now, in the short term, we can stay bullish on SPY as long as it's above 390, because I did tell you, you can get bullish on this market above SPY 390. Above 390, you could still have a run all the way up there to 411 for very nice gains of over 5%. But if you're just now buying at these levels right here at the price target at 399, you have to remember you only have about 3% upside before you're getting very major resistance from the bear. So remember, the higher we go, the risk reward ratios are favoring the bears to start driving prices lower. So you need to get less bullish as we go higher, and you need to consider getting more risk off as we approach that price target right around 411, or even the 200 simple moving average, which is only down here right around 407. So as you can tell, you need to get more bearish the higher we go, because the risk reward ratio is going to favor the bear. And I can assure you, the bear has not yet left this market. If you're sitting there thinking the bulls are back, baby, and there's no way the bears are going to defeat the bulls at that level, you need to check your bias at the door, because the short-term trend being bullish is going to quickly become an elevator down once the big bad bear starts to enter the market yet again. Remember, the big bad bear has a huge brain, and he doesn't blindly short at every resistance. He is waiting for the perfect opportunity. He is waiting until retail becomes bullish and thinks the bear market is over, and then the big brain bear is going to strike, and it is going to be a bloodbath. So wait until the bulls prove the bear market is over. Do not assume that it is. And right now, that level of risk is going to be defined at SPY 390. Below 390, we can easily fill the gap at 381, and then the bears will start to continue to try to drive prices lower. So I continue to remind you, your risk level on SPY as a bull is 390, and you instantly need to get a lot more risk off if the bears drive price below that level. The next bull breakout will be above 399, and then we'll be looking for the gap fill and test of the 200 moving average around 408. And the critical resistance trend line that defines the bear market is right around SPY 411. On the NASDAQ 100 triple Qs on Friday, we were up 1.84%. And as I went over earlier, we did get the confirmed double bottom breakout because we did break the neckline at 284, which does give us a valid price target at the gap fill at 308, which is also going to test the negatively sloping 200 simple moving average. And on the way there, we will have to battle the big bear at 293. So there's going to be critical resistance right here where we closed on Friday around 288. And if we break 288, we're just a little bit higher to get to the next critical resistance at 293, which is only 1.8% higher from where we closed on Friday. So get less bullish as we approach critical resistance because the bear is very likely going to try to take a bite, which could easily take us back down to retest the breakout level of the neckline at 282 to 284. Below the neckline breakdown, if we continue lower, then the bears will be trying to close the gap right around 268. So set your risk right there, right around that 282 to 284 neckline breakout if you're staying bullish in the NASDAQ 100. Now, if we break through and defeat the bear at 293, then this double bottom is looking very good to fully close that gap. So I continue to remind you, you can stay bullish in the short term while we have these bullish patterns. You just need to manage your risk very tightly if we lose critical support. On the Dow Jones DIA ETF, we were up 0.16% on Friday, so you can tell the Dow Jones is starting to run out of steam. And if you look at the daily candle, this is called a hanging man candle, which means we are very likely close to the end of the trend. And as you can tell, it is clearly an uptrend. So we're getting a lot of exhaustion in this bull rally in the Dow Jones, and we still do have a gap to fill right around 339 and critical resistance just below 342. Now we have gaps to fill to the downside at 331 and then all the way down there at 285. So remember, if the bear market is not yet over, there is a real possibility we could still get rejected and go all the way back down to 285 to complete this bear market. That is a weekly gap, and if you go look at a weekly chart, it is very hard to find gaps that did not get filled. So look for strong resistance in the Dow around 339 to 342, and then below this trend line, if we break down, you're looking for the gap fill at 331, and then a retest of the 200 moving average around 325, and that support zone right around 324. That's also going to be the 20 simple moving average, so the bulls could make a stand at that level. On the Russell 2000 IWM ETF, we were up 0.82% on Friday, and we did reach the double bottom price target and gap close, which was that level of resistance at 188, and we instantly found resistance at that level, and sellers started to step in. We did close above the 200 moving average, but we are seeing sellers around that resistance, and we are also at our resistance trend line, which is right there, right around 187. So the next bull breakout will be the break above 188, breaking above the previous daily high just below 190, and then the bulls will try to start running towards 195. Now I'm going to do weekly chart analysis this weekend. It's going to be very important you look at the small caps on the weekly chart because right now this is very critical resistance, which means if we do get rejected, we could be coming all the way back down to the risk level at 178 to 176. You could stay bullish as long as we're above the risk level, but that's a long ways down, which means you have a lot of risk if you're buying at these levels. So if you are buying up here, you need to set your risk right around 186 to 183. On the ARKK ETF, we were up 8.31% on Friday, and ARKK is starting to see a very impulsive bounce off of the lows, but we still do have that gap to fill to the downside right around 34. So if you are trying to stay bullish in the ARK ETF, you need to set your risk right here, right around 38 to 39, and instantly get more risk off if we break down below that level. Look for the next upside resistance right here, just below 41, and then we're going to have very strong resistance right around 43. On the VIX, we were down 4.21% on Friday, and we see the VIX continuing to close below 24 for the second day in a row, and we are clearly in a strong downtrend in the VIX, which is favoring the short-term bull rally. The next likely target for the VIX is going to be this gap fill right around 21, but I would not be surprised to see the VIX continue to spike as we hit these support levels, which is going to give us short-term pullbacks in the indices. Overall, the VIX is getting less volatile below 24, but it's still a volatile market while the VIX is above 20. On Bitcoin, we're currently down about 1%, and we can see Bitcoin did get that bounce off of that support right around 16,000, but as you can tell, it could still be a lower high before the next lower low. So manage your risk right there around 16,000, and below that support, we're very likely going to 14,395 or $12,000. There's clearly plenty of news going around in the crypto world, and as you know, these are very risky assets. So remember, if you're accumulating this for the long term, make sure you're doing it with something you're comfortable with. And I do believe if you are buying at these levels and you're willing to hold for 2 to 3 years, I do think you will be just fine, but that is obviously just my opinion. You need to manage your own risk. Next upside resistance from here is going to be right around 17,500 and that previous support level at 19,000. On Amazon stock, we were up 4.31% on Friday, and we see Amazon continuing that strong bounce off of the price target right around 88, and we're right back up near that strong resistance I've been warning you about at 102. It is a very good chance the bears are going to try to step in at that level, but if the bulls blast right through 102, then we're looking for the gap fill above right around 110. A rejection from 102 should send us back down to fill the gap at 89.5 and possibly a retest of the lows, or if we do break down, we're looking for that next leg lower down here at 77. On Microsoft stock, we are up 1.7% on Friday, and Microsoft is getting the bull breakout above the resistance trend line and critical resistance level right around 242, which means we could come all the way back up to the next critical resistance zone at 252. Above 252, we're looking for the gap fills in the 260s, and a rejection from resistance at 252 should send us back down to retest the breakout at 242 to about 237. And if we break through all of that support, look for the gap fill around 228. On Nvidia stock, we're up 3.66% on Friday, and Nvidia is still looking very impulsive off of the low, and we did break through some critical resistance at 156 and 160. We're clearly getting very overextended and way outside the upper Bollinger Band, and the next critical resistance is all the way up there right around 179. So whether or not we get to 179 or get rejected is to be determined, but you can stay bullish above 156, but below that you will be looking for the gap fill right around 142. On Tesla stock, we were up 2.75% on Friday, and Tesla is continuing that bounce from that way oversold condition where we were way outside the lower Bollinger Band, and we're now seeing a high volume bounce back up to fill the gap at 196.7. Remember, that gap fill is instant resistance, so we could get a pullback from there, but if we break through it, then you're looking for the next price target right around 205 to 209, and that is going to be the critical resistance of this downtrend. Above that resistance, we can likely run back up to 222 to 230, but again, those are going to be very strong resistance levels. To the downside, look for support right around 187, 180, and the next downside price target is just below 173. And if we do get to 173, I do think that's going to be a great buying opportunity. On Apple stock, we were up 1.93% on Friday, and Apple is looking very bullish back over the 50 EMA and blasted right through that gap fill at 145 and closed above critical resistance at 147. As you can tell, we're still below the resistance trend line and resistance level in the 150s, but that does mean there could be a little bit more upside before we see a strong rejection. And if we do get a strong rejection, you're looking for the gap fill to the downside at 138 on a breakdown below 147. So you could stay bullish above 147, but recognize very strong resistance is just above around 150 all the way up to about 153. On the financials, we were up 0.82% on Friday, and the financials are back over all of the moving averages, including the 200 simple moving average for the second day in a row. So this is obviously looking very bullish in the short term. You could stay bullish as long as we're above the 200 simple moving average, but below that will likely fill the gap just below 34. On the industrials, we are flat on Friday, and we're still looking bullish above the resistance breakout at 99 and the resistance trend line. So you can stay bullish above 99, but it's very likely we're due for a pullback, which will at least fill the gaps to the downside. The healthcare sector was down 1.22% after getting rejected around that resistance at 134, but overall still in a bull trend. The energy sector was up 2.91% on Friday, and we could see energy is still bullish while it's above 87 to 88 and retesting the previous 52-week high at 93. So it's very likely going to be a trading range in this zone before we get a breakout. It's very likely going to favor the bulls because we do have a strong bull trend. So jumping back over to the S&P 500, remember that you are still in a bear market, but that does not mean we can't go higher in the short term first. I'm going to do a very important weekly chart analysis this weekend, and I do think if you combine the weekly charts with this daily chart analysis, you will have a very clear understanding of where the market is and the current cycle of why we're going higher before we could potentially still go lower. So don't miss that video that I'm going to upload tomorrow. I think it's going to really help you understand this bear market and where we're likely going from here. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.